All right, so let's get started. My name is Derek Frey. I'm a senior market strategist daily at Fixed Groundworks. Markets. For anybody who's new, I use a harmonic-based methodology. So everything I do is based on math and science. I'm not going to give you my opinion because I pretty much don't have one. My opinion is I don't have an opinion. I don't really care about anything. Caring costs money. I mean, at least about trading. I don't care about trades. It's not to say that I don't, whatever, but being married to the outcome of your trades, having your own self-worth being aligned with the outcome of your trades is the surest path to insanity that I know of. So I don't do it. I'm crazy enough. I don't need any help in that department. And I can also say that I don't know very many professional traders that do care about their positions. I know a lot of unprofessional traders who care a lot about their positions, but I don't know a lot of professionals who do. And that should tell you something. Not that we're all a bunch of callous jerks. That's just me. But it should tell you something. It should tell you something very important, and unfortunately I realize that it tells most of you nothing. It's part of the problem, isn't it? You can see even in a slow week, we had 371 harmonic opportunities yesterday alone, which is lower than normal. Normal we see about 500. But you see it's not like massively different. So what do you guys want to talk about today? It's mostly regular, so what do you guys want to do today? What's on your mind? Swissy. I'm long euro, so that means I would not probably be short Swissy yet. Oh, and no, there's that double bottom down there. So no. Okay, so if you go out to a weekly, or even a daily, you can see on a daily, you can see that you have this just slightly violated now. It just did it earlier this morning. Prior low here from back in Novi of 8, I think, or 7. Oh, this is March of 8. So markets do not respect the concept of perfection for a whole host of reasons, but I'm not going to get into why. It doesn't matter. The bottom line is they don't. So now that this has been violated, I'd be a little bit more interested in starting to take a look at the long side, but I'd be more patient waiting for, let me go look at the hours. Yeah, you see this one failed, and now you have essentially a complicated crab in play. You probably will get some sort of reactionary bounce, but I personally am not really going to play it, no. I'm long euro from 130.92, just below 131. So I'll have like 100, whatever, 60, 70 points on that, and I'm looking for some real follow through there, to be honest. More than we've already seen. Let's take a look at this euro 1 hour bearish. That's actually not bad looking. First of all, the structure is only utilizing about 25%, maybe 30% if it's lucky. That's kind of minimal. I usually like to see 50% or more of the superstructure enveloped by the substructure. Let me do the numbers real quick. Current is what? 32, 70, 65. Just call it 60. And the B point here is 3150. So you're looking at 100 points down, and you can risk 133 basically. 40 points up. 40 up to make 100 down. better than 2 to 1. It's not bad. Yeah, if you're doing it 25 to make 100 and you're getting 4 to 1 on it, it's even better. But I'm personally going to stay long. So as much as this is there and I'm not arguing with you, I'm still not doing it. I'm still on the other side. We talked about buying the euro yesterday, didn't we? Didn't I tell everybody that? Because I was in the same trade then. I know I told you. Gold is toying with the magical $1,500 level once again. I think you can very clearly see the bearish pattern taking shape here as well. Although it's not one that's offering a great risk-reward ratio, it's certainly there. There's a basic Gartley pattern. That's the thing. No, I didn't enter the euro at the steep point. I would never do that. I had a different bullish pattern that's not on the charts right now. I would not bother with, I don't trade the patterns as they're under construction. Just like I wouldn't move into a house while it's still being built. Move into the house once construction is complete, trade the pattern once the pattern is complete. I don't do under construction. I don't want a bunch of hammers and nails and scaffolding falling on my ass. Sorry, tiny. Aussie. I don't even really have to look. I wouldn't touch it until it approaches 102. As it approaches 102, I would begin, keyword, to initiate shorts. You can see the bullish pattern that definitely correctly forecasted this move higher, the bust up through parity, the run up, through parity. There's another angle. But as of yet, there is not anything. Yeah, so there's really nothing yet. You have the outline of a pattern here. You got X, you got A, you got B, you get C, and you get, I've drawn it. It's not picking it up, but it's there. You see why we don't rely on software? You see why software is for geeks and freaks? Software. As if computers. I've got the best, most powerful computer on the planet. And it goes with me everywhere I go. And I don't need any upgrades or patches or virus checking software. You all have the best computer in the world. It's ridiculous that we use these stupid, slow-ass pieces of silicon. They're a joke compared to what we can do. Not my math brain, everyone's. I'm not trying to be egotistical. You all have much more powerful pieces of machinery than some stupid computer. Problem is, 99% of people that walk on this rock choose not to use computers. Anyway, so you can see the software doesn't pick it up, but clearly the pattern is there. Like I said, software, whatever. Dollar yen I wouldn't touch right now. You can see the pattern, obviously, but it's kind of in meltdown mode. You have multiple patterns here. I'll try to draw them all in. It's going to get messy, but 1, 2, 3. 1, 2, 3. Then we also have 1, 2, 3. 1, 2, 3. So you have a pattern within a pattern, not a shock. For anybody who understands harmonics. So you do have a decent signal here, but I wouldn't convert it into a trade. Your risk-reward ratio is really not that favorable. You're looking at maybe catching a run to 82.25, maybe 82.50 if you're lucky. and you're printing 81.90 right now. So you're looking at 35, maybe 55 up, maybe 60 on a good day with a tailwind. And you still got to put in at least 30 down, 30 out there. So I mean, you're maybe 2 to 1 if you really stretch things, but I think there's better opportunities right now. Yeah, I'm in a long position too. I've been long since last week, below 131. I'm still with it. But I intend to hold it through the week. Or at least into Friday. I'm sure I'll exit it by Friday. But I guess the biggest question would be, where's your stop? That's kind of the biggest determining factor of if you should stay in or not. And for me, my stop's still at break even, but I actually need to move my stops too. So I'll do some quick analysis here and figure out where the hell I want to move them to. My stops are currently down here. I can at least press them up to 31. This is 32, so I could lock in 100 at something. Yeah, I think we'll do that. We'll lock in at 132.
Trade modified.
Like that. The guppy I took a shot at last night got stopped out for a loss. You can obviously see the bat pattern that's there. Very well pronounced and very well defined and formed here. I'll draw it in as usual. 1, 2, 3. So simple. So simple. 2, 3. So the risk reward on this puppy is good. That's why I took a shot at it last night. Your B points to move back to 129, 130, depending on exactly where you're placing it. But let's just call it 129 to make it simple. And you're right now at least buying below 127, and you can run stops below 2650. So you're looking at maybe risking 50 points to make 200. That's flying away. Excuse me. That's 4 to 1. So certainly better than a stick in the eye. Target area. Oh, you must be talking about euro. 33.80. Yeah, I mean, I don't have targets. I have targets that I calculate for risk to reward purposes. So, I mean, to be honest, the first target was already achieved in this one, because here's the original pattern that I traded off from this 4 hour. You can see it here. X, A, B. Whoops. Wrong button. So there's the pattern that I traded off of. You can see the C point's a violation of the prior A point, which by classic harmonic definitions would not be valid, but anything but classic. Here is the bigger pattern. So what I really was doing was I was timing the entry of this big pattern with this little pattern. See how they're like fractals of each other? You see how this one is like a smaller version of this one, otherwise the same exact pattern? That's not a coincidence, people. It's a lot of things, but coincidence is not one of them. I can assure you of that. First of all, there's no such thing as coincidence at all, but that's a whole other story. We can have that conversation another day. So that's really why I'm staying in this thing. I'm not trying to be pig-headed or greedy or that I'm not paying attention to the sell patterns and blah, 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 blah. I simply am using this micro pattern, which is already completed, as a timing mechanism to enter the macro pattern. That's it. Nothing more, nothing less. And since I've already moved my stop in to lock in over 100 points of profit, what the heck do I care? Worst case scenario for me is I make over 100 points. It's not a bad day. Right? So I'm not afraid to let it play through. How do you manage your trades? Normally, now this week's a little different because the liquidity and volume is still reduced, so there's some caveats there, but normally, there is such a thing. I move my stops to break even once I've achieved a profit equal to or greater than the original risk. So in other words, if I was originally risking 50 pips and I now have a 50 pip open profit, I'll go ahead and move my stops to break even. Then from there, I simply will move my stops up based on prior support and resistance. So, I mean, I moved my stop up to 32 for obvious reasons, right? If you look at this on like an hourly basis or a 15-minute or 5-minute or whatever, you can see it better on smaller time frames. But you can clearly see that after rallying through 132 and I'm going all the way to 132.50, it pulled back and held support just above 132 and then took out the prior high. So from a swing high to swing low kind of a concept, I'm just trailing behind the next recent pullback. Nothing fancy, no rocket science. That's it. Real simple. Try to let it go as far as it wants to go. I don't know where it's going to go, and neither do you. Neither does anybody else. You can listen to all the webinars you want all day long. Nobody's going to tell you where the euro is going to go, because no one can. If you believe someone can, then you're a freaking moron. Sorry. No one can tell you where it's going to go. Many people will tell you where it's going to go, but no one actually can. And ultimately, where it goes doesn't matter in the grand scheme of things. It's not going to change whether or not I'm profitable as a trader or not. The outcome of a single individual trade has no bearing. So today, we know is another lighter day than normal in terms of volume and liquidity. Mostly because the Brits are still offline. So if you want to, do we have any UK people here? We're going to use you as the whipping boy today. Because you guys are still stuck in the pub, and the markets are still stuck in the mud. We're blaming you. All right, so what else do you guys want to look at? Anything? Oh no, I've been known to throw back a few. No, I really don't care. I'm just kidding. We knew it was a bank holiday. No big deal. So, if liquidity and volume equates to energy, which it does, the less liquidity or volume there is in the market, the less energy potential it has in it. If that's true, we should be able to draw some pretty cool analogies, right? So, think about it for a minute. If you are not feeling well, like myself, who has a almost broken ankle, if you're not feeling well and you don't have all your energy, how do you move? If you don't have all the normal energy that you normally have in your normal day, how do you move? How do you move about your house, your work, your whatever? Right. Slower than normal. Movements are more exaggerated, right? Takes you a longer period of time to pour that next beer, doesn't it? Am I wrong? Anybody else speed up when they have low energy? Possible, I guess. Anything's possible. Not very probable, but right. So the reason, I'm trying to explain the rationale for why I'm quote-unquote ignoring. I'm not really ignoring the patterns, bearish patterns of the euro. But I'm also not quick to react to them. Why? Because we know the market's going to react slower than normal. So there's no rush to do anything. Just like a person who's low on energy, the collective person, that is the market, is lower on energy. Therefore, everything's going to take longer. It's going to be a more laborious process to do anything. To go up, to go down, to go sideways. It's nothing. Everything is going to be more of a pain in the ass, just like it is when you have low energy, right? And this is just common sense. It's just life 101. You don't got a lot of energy, not a lot's going to happen, is it? I don't care who you are, what you do. Energy is the fundamental driver of everything that we do. Without it, we go nowhere. And when it's lacking, we go nowhere fast, right? Well, these signals, these patterns are indicative of turning points. So I wouldn't say it's lack of energy on follow-through. I'd say it's lack of energy to actually stage the turn. Not lack of, I'm not saying it won't happen. I'm just saying it won't happen quickly the way we expect it to most of the time. It will be a slower grind. It's already been a slower grind. You can see that in the charts. Just by the fact that most of the PRZs are getting violated to the right-hand side. Which means time is churning. Normal. In a low liquidity environment. We would expect this. I expected this. That's why I didn't panic and do anything with my positions overnight. It's not like I knew this was going to be like this. I just had a set of expectations. The difference between knowing and expecting, obviously. I never know what's going to happen. That would be insane. I would have to be a complete jackass to ever say something like that. Nobody knows what's going to happen. Anybody who tells you they do is admitting that they're a complete idiot. You can't know the future. You can only estimate it. So anyway, that's why I'm not in a rush to flip and rip these around. I'm not saying I won't exit. I very, very well may exit at some point this morning. But I was just trying to explain why when that bearish pattern emerged like 4 hours ago, I didn't freak out and pounce on it like I would in a normal week. If it was a normal week where liquidity was in full gear, I would have been much quicker to react. Now, I'm not saying it would have been the right thing. Only hindsight would tell us that. But I can tell you I would have been quicker to react. That's for sure. Sorry. Jeez. So what else, guys? What else you want to look at today? Come on. Talk to me. This is a slow, boring week. I'm looking to you for excitement. Work with me. Hook me up. Come on. Euro Aussie has a 15-minute bullish pattern we could talk about. You guys apparently have nothing. You can see the B points back at 31, current's 3060. 3075. And the bottom of the PRZ is 3050. Yeah. So right now the risk reward is inverted for 1-to-1 if it's lucky. So it's not something I'll take. But if we plunge towards 3050, I might. Anyway, it might be cool. I've totally stopped trading gold myself. Since we were at 1425, I sold it up there and I covered it at like 1370. I'm way too early, but still okay with it. Can you turn that off? Here's your gold. Even if you get a reversal at 1402, like you're saying, and I wouldn't be surprised if you're right, your target's only moved back to about 1390. So, I mean, I personally, unless you're going to be running a really tight stop, like a $3 stop or something, it's not going to be worth me personally. But that's okay. If you're comfortable running a $3 stop, by all means, go for it. I don't have any specific triggers that I use to get in, other than if the risk-to-reward ratio is offering positive expected. I can't explain this enough. I am not trying to figure out what's going to happen next. I am not predicting the future. I don't give a damn if any of these trades work out. And it's not because I'm a rich asshole that no, I'm sorry. No, it's because the outcome of individual trades do not matter. They cannot matter. If you put yourself in a position where the outcome of a single trade is going to affect your life, I promise you, you are not going to make it as a trader. You are a PT, temporary trader. And PTs always give their money over to us, those of us who are PTs, permanent traders. So I'm not trying to sit there and say, well, I got in because I knew it was going to work. I have no idea if it's going to work, and I don't care. I know that the method that I use works the majority of the time. But in terms of the individual trades, and this one and that one, and is this going to work and that one going to work, I have no idea, and I don't care. That would be a complete waste of my time to try to figure that out. Because, number one, you can't figure it out, first and foremost. And number two, what good would it really do me? I don't need to know where it's going to make money. I only need to know what the odds are. I think that is like one of the biggest distinctions I can try to point out for people that's different from what we do versus what other people are doing. We really, really do not care about the outcome of individual trades. We know in the long run what we're doing works. So if I happen to, so I don't need to sit there and micro-analyze the setup. That's what I'm trying to say. Setups are all the same to me. If there is favorable risk to reward, if there is positive expectancy in the equation, then I'm in. It's pretty much that simple. I don't look for crazy candlesticks. I don't have, wait for some pullback to a moving average or some whatever, blah, 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 blah. No, if it has positive expectancy, very simple rule. If I can make more money than I stand to lose, that's what positive expectancy means. I stand to make more than I stand to lose. Not just, I think I can make more than I stand to lose, but truly mathematically speaking, with real history, real statistics behind it, that's at least 100,000 sample size deep. No less than 100,000 iterations, okay? I'm making decisions based on that. They're not really decisions. I'm following along a plan based on that. I'm not really sitting here saying, I think this is going to work. I think this is a better trade. I have no freaking idea, and I don't care. I don't need to. They're all the same. If there is positive expectancy when it enters the TRZ, I don't do it blindly. There is a filter, but the filter is risk to reward. But risk to reward, you have to understand, doesn't tell you whether or not it's going to work. Just because something has 5-to-1 risk to reward versus something that has 2-to-1 risk to reward doesn't mean that 5-to-1 has a better chance of working. In fact, the opposite is true. The 2-to-1 theoretically has a higher probability of happening than the 5-to-1. So it's very easy, but the key is removing the need to be right. And that's what most people can't do. Emotionally and ego, hard to remove the need to be right, isn't it? As a trader, you feel that you want to be right. When you make a winning trade, you feel it was because you were right. Am I right? That's how most people feel. When I make a winning trade, I know it's not because I was right. I know it's because I followed my plan, which I guess you could say made me right, but it's not about right or wrong. It's about following a plan. That's it. The only time I'm wrong is when I don't follow the plan. As long as I'm following the plan, win, lose, or draw, I'm doing the right thing. My orders are market orders, Spunky. I don't like to use limit orders personally. But there's plenty of people who use this method who use limit orders, though. I just don't like it. I'm a market kind of guy, market order. But that doesn't make it right or doesn't make it better. That's just a personal choice. You want to use limit orders? No, not going to change. It's not going to change the strategy. It's just that's a personality thing. And you got over it too when you got serious about retail. So you understand what I'm saying now. The people that are losing are intimately tied to winning and losing, are they not? When you are losing, are you not intimately tied to winning and losing? Does it not emotionally wreck you when you lose and make you feel like you're the king of the world when you win. But only when you're actually net losing over time do you feel that way. When you're making money over time, you don't feel that way anymore. And it's not because you're making money, it's because you realize why you're making money. And you realize why you were losing money. You were losing money because you were emotionally involved. Because you let your emotions drive. Even when you thought you didn't, you did. You know you did. Come on, be honest, right? I know I did. Here's a test. Here's a test, okay? This is how you can tell if you are doing this professionally or if you're still in rookie land, okay? You want to know the test? I got more important things to do, to be honest. Nobody wants to hear it. I don't care. Still a good test. Put all your trades on. Put all your stops in, of course, and your targets. Shut your computer off and walk away for 24 hours. No less than 24 hours. And don't look at the TV. Don't pick up the newspaper. Don't look at your iPhone. Walk away for 24 hours. If you can't do that, you are emotionally involved in your trades and you will lose. Thank you for playing. You can have the nice home version of this game, but you will not make it on the street. We will take your money. We are very good at it. Market is efficient at one thing, taking people's money. That's what it's efficient at. So if you can't put all your trades on, turn your computers off and walk away, Allah help you. That's all I can say. How many people have done that? If you're losing money every day, then you're fundamentally using a shitty strategy, and you should rethink what you're doing. Winning traders do not... Okay, first of all, we know we're going to have losing streaks. I'm in the middle of a losing streak right now. But I also know that I'm not going to make any changes to get out of that losing streak. If I start making changes, I know I'm screwed. I know my method works over time. I know it's going to have losing streaks. So you have to know what you're doing in the bigger picture to be able to get through those short-term aberrations, because they're going to come. You know, even when you flip a quarter, sometimes it goes heads, doesn't it? It doesn't mean the quarter's broken. It doesn't mean the quarter's out to screw you. It doesn't mean the quarter's not 50-50 either. It's still a 50-50 quarter. But sometimes it just goes heads. And sometimes trades go lose. It's just part of the game. But if you know that your strategy is a good one, then you can get through it by not making changes, by just keep on keeping on. If you don't know your strategy is a good one, then you're screwed. Well, what you're telling me is you're using too much leverage. The only way you can make it if you're new is if you're using too much leverage out of the gate, which you're correct. But if you're using proper leverage, then that's not the case. Most people are using ridiculous leverage, and then you're absolutely right, and they won't last. But if you're using the correct amount of leverage, it should never really become an issue. No, I don't care about which pairs I'm trading. I mean, I care about them from a different point of view, from a business standpoint. But as far as harmonics are concerned, the patterns are going to exhibit themselves and work the same on the Israeli shekel against the South African rand as it is against the euro against the dollar. It makes no difference. The difference is, from a business standpoint, the cost of doing business in the Israeli shekel versus the South African rand versus the euro versus the dollar, it's a much higher cost of doing business in the Israeli shekel because the spread is much more, right? The spread is literally the cost of doing business. So I do most of my trades in the majors because I like to keep my business costs down like any intelligent business person. But can it be applicable to the other stuff? Absolutely. It works on any market. It doesn't matter what pair, what currency, what commodity. It works on commodity, stocks, bonds, everything. There isn't a market yet that doesn't work for. No, I wouldn't say it's wrong to stop trading after, say, 3 consecutive losses. If that's what you want, if that's the goal you want to put yourself in, that's fine. There's nothing wrong with pulling yourself over to the sideline. Nothing wrong with that. Yeah, I got to wrap it up. Absolutely. Be safe out there, people. This is a wild, a very strange week with all the liquidity issues and everything else that we've been talking about. So be patient, be cautious. Don't look for immediate movement. Look for things to be kind of muted and slow and bobbling and dawdling around. If you're new, you should be able to trade at least 100 trades using zero leverage before you start using leverage. Okay? Leverage is something that you add in after you have a proven strategy. You don't start out using leverage unless you're crazy or stupid. Okay? You start out using none. You make sure that everything works right. Just like you don't jump in a new car and go 200 miles an hour, even if it's a Ferrari. You jump in a new car and you go slow at first. You make sure everything's cool. And then slowly you ramp up the gas, right? You don't just immediately jump in and punch it. Leverage is the same thing. You don't jump in your trading account and punch it. You get in and you slowly make sure everything works. And once you're certain that everything works, then you can slowly begin to apply. Oh yeah, I got a ton of websites. Here's one of them. Anyway, guys, I got to wrap it. Have a good day. Be safe, and I'll see you back here tomorrow.